is ultimately the sentiment of access to growth companies in the US right now?
Yeah, look, there's been a real dearth of opportunity to invest in growth tech in the public markets. If you look just at the 500 or so companies, tech companies that are public right now that are $2 billion market cap or more, there are only less than 30 that have grown 30% in the last year. And so the opportunity to invest in growth isn't really there necessarily in the public market. The bid for IPOs is there from the investor side, but we haven't seen that translate into much activity this year, partially because of the rate environment, and investors, corporates are looking more to 2025 as a year of optimism, I think, in the new issue market.
And look, we add that context of the day with yields just pushing higher for longer, whether it's in Europe as well. We see German bond yields pushing higher as it looks like inflation is hard to curtail. But is it just the rate environment? Is there also an element of political issues? Is that why 2025 is going to really be the year to come?
Yeah, I think at this point, a lot of issuers are saying, 2025, we'll get through the election cycles. We'll get, to a place where we hopefully start to see rates come back down. So there are some issuers coming out in 2024 and certainly getting a lot of attention from investors, but there's more optimism, I think, in 2025. And that's true for both, growth companies, but also super profitable businesses inside private equity. A lot of the private equity firms are opting to do private minority stake sales to establish marks and get a little bit of liquidity instead of going to the IPO market this year.
Kristin, good morning. Hello. I hear from a lot of founders, a lot of CEOs, a lot of people right now that are much more open-minded to doing some M&A or even going private. Why is that?
Yeah, the take private activities increased significantly this year. It's up 50% in the tech industry from last year. Part of that is an acceptance of kind of where we are from a valuation standpoint. But the other part is on the financing side. The last couple of years, the financing for LBOs have been driven by the direct lenders in the private credit market. We're now starting to see some of the more traditional funding sources in the broadly syndicated market available as well.
Convertible issuance is interesting. Take my word for it. It's interesting. One case study out this morning is Lenovo doing an arrangement with Saudi Arabia through one of its investment firms on very favorable terms. But it's also kind of a quid pro quo, right, where there's the financing side of it, but Lenovo has to set up an R&D facility in that country. I've heard it elsewhere. In fact, I've heard of shareholders selling out of the stock, buying up convertible notes in the same name. What are you seeing in that market?
Well, the convertible market, I think, will be pretty active this year. There are a couple of interesting things that have changed with this higher for longer sentiment. One in particular is that we're now seeing issuers refinance floating rate debt with convertibles, and they're saving up to 50% in interest expense with premiums that are 100%. So it makes a lot of sense for some of these large cap issuers. The other thing we're seeing in the convertible market is large cap issuers doing a convert to repurchase shares. And so I think that the convert activity will only increase meaningfully this year, especially in this environment.
Isn't it interesting that ultimately at a time where markets go from record high to record high, there's less and less access to getting into the public market, and so much of the enthusiasm we talk about on a daily basis is in the private markets. There's also a lot of talk around M&A, and I'm interested as to what you're anticipating there from even fewer publicly traded companies going forward.
Yeah, so the take privates we've talked about, I think that we've also seen an increase in strategic activity in a meaningful way, and we'll continue to see that throughout the balance of the year. And then some of the smaller M&A that's happening tends to be a little, some of these early stage AI technology businesses, but they're scaling very rapidly. So that could, over the next 12, 18, 24 months, mean much larger scale M&A and adding to this already massive IPO backlog.
Kristin, for all of the growth stage technology companies out there that are watching this show right now, be it the founders or staff, what's a good reason to go public? What is a good motivation to list your company?
Well, the biggest reason right now that companies are opting to go public tends to be employee liquidity, being private for a number of years, giving their employees an opportunity to start to find wealth in a publicly traded stock. Or to validate a technology or the staying power of a private company. Some companies opt to go public because their customers are worried they're not going to be around or not going to have long-term funding. And so they, from a reputational standpoint, want to be public. And the last is probably, the investors looking for liquidity. And again, private equity is, I think there will be a number of IPOs that come out over the next couple of years because we haven't seen a lot of activity out of private equity and returning capital to LPs. But right now, they're, for the most part, finding liquidity in the private market more appealing than the IPO market, although we're seeing some really attractive assets coming public just in a more limited basis.